Alright, today's January 23rd. I'm Keith Weiner, CEO of Monetary Metals and President of Gold Standard Institute USA. There's a story circulating in the gold and silver community right now, which is that the physical silver market has become tight as a drum. How do we know this? Well, the US Mint has announced it's run out of silver eagles. So the obvious answer to this story is you should buy silver now, let the price rise, and then sell the silver and take profits. But, as we said on January 2nd in our New Year's resolution, we think that people should measure their wealth in gold rather than in dollars. So the problem with the trade as expressed this way is that one is trading to make more dollars. Since every central bank in the world, including the Fed, is fighting to debase the value of their currency, having more dollars does not necessarily mean having more wealth. Having more gold, on the other hand, means having more wealth. So we'd like to restructure this trade. Let's take a look at how we can use this trade to make more gold rather than more dollars. Here's a chart of the gold-silver price ratio. This is nothing more than the gold price divided by the silver price. With dollars canceling out of both sides, what we're left with is simply how many ounces of silver does it take to buy 1 ounce of gold. So this summer, it was about 59. If you had 100 ounces of gold, you could have used that to buy about 5,900 ounces of silver. And fairly quickly through late August and early September, the ratio falls to about 51. So at that point, you could have traded your 5,900 ounces of silver for about 115 ounces of gold. So that means you start with 100 ounces of gold, you buy some silver, you sell the silver, you have 115 ounces of gold. You've made a 15% profit in real money. After that, we notice the chart begins to rise, and then it falls, and then it rises to a higher high, and now currently it's falling, but it looks like we may be forming a bottom that's a higher low. And so that leads us to the question, is now a good time to do this trade? Do you really want to buy silver right now? Is the silver eagle market a good proxy or a good indicator for tightness in the physical silver market overall? Here's a chart of what we call the gold basis. The basis is simply the price of the metal in the futures market minus the price of the metal in the spot market. What the basis is measuring directly, unlike the weak proxy of US Mint eagle sales, is abundance or scarcity in the physical markets. So the takeaway from this chart is that the basis for gold has been falling, which means abundance in gold has been decreasing, or we can say scarcity in gold has been rising since July. And opposite in silver. The basis has been rising, which means silver has become significantly more abundant in the market since July. So obviously, to revisit our trading thesis, is now a good time to go into silver? The answer is no. In fact, we might suggest the opposite. If you have any silver that's easily tradable, you might consider swapping it for gold.